Hi, everyone. This is Jason Burak of Wall Street for Main Street. And today, Mo DeWood and I are joined by a very special guest. We are very privileged to have David Morgan of silver-investor.com. David Morgan is an investor, an entrepreneur, and an author. Hi, David.
Hi, Jason.
Hey David, how you doing?
Oh, I'm doing great. Thank you.
That's good. It's interesting time in the silver market right now. You must be real busy with you must be getting hundreds of emails from people asking about when silver's gonna top or if silver in the bubble, I assume.
Oh yeah, it's gotten rather crazy. It's been crazy, I guess, and it's gotten crazier. And all jokes aside, I've been to a couple conferences here recently. I travel a great deal, as most people that follow my work know. And I made that trip to Asia, came back for a brief time, then I was off to Chicago for the Natural Resources Expo. I was the keynote speaker there, and really, I can almost hardly go to the bathroom without someone following me around and asking me a question about the silver market. But, it's gotten pretty crazy.
Yeah, the silver market is just going up without any correction, and people like Jim Rogers is kind of worried that if silver goes shoots up without any sort of correction, it could just collapse once it tops. Do you agree with that?
Boy, it's a tough call to make on that. I'll stick my neck out. I mean, I watched, I've been in the markets for so long and I've studied very much, but no matter how much experience anyone has, markets continue to baffle the best of us. But, watching what happened to uranium, the thing that you're not seeing in silver that you saw in the uranium market when it just went, crazy, 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 was you saw all these new uranium companies coming, popping up. And the last one I saw of note was Blue Sky Uranium. I thought, that's got to be the top, and it was. Silver, you're not seeing a bunch of new little silver companies coming in. There may be a few. I certainly haven't really seen much like in the uranium sector. The problem is, though, if you do keep going up and up and up, the potential for a large or larger correction is certainly more likely. This, and I'm not going to say it's different, but the situation with silver is that the market right now is as tight as I've ever seen it in my lifetime. So as long as all the holders that hold it don't sell it, and there is any kind of buying pressure, even at hypothetically $100 the ounce, you're not going to get a sell-off. In other words, you're not going to get a correction if the physical market is really dictating the price now, and I believe that is the case. The problem with the silver market is that there's so much paper silver out there. So if the shorts start to panic here, and I just checked the Commitment of Traders report recently, and well, today I checked it, and doing this in my head, I think it was 52,000 contracts net short on the commercial side. If you multiply that by 5,000 ounces per contract, you're looking at 250,000 ounces net short on paper. There's no way anyone could cover that in physical. And the market really doesn't care if the buying pressure is buying it physically or buying it on paper. It's still buying pressure. So if those large banks, and there aren't that many of them, decided they had to start covering their short position, just think of what an additional 200 million ounces of buying pressure would do to the price. Now, once that was exhausted, as an example, then, of course, that huge amount of buying pressure would subside, and then you'd probably get, that would be the blow off top, so to speak, and it would, correct down. So, I basically am very happy with the progress so far. And if you look, from a longer term perspective, the only market of the four precious metals, gold, silver, platinum, palladium, that has not made a nominal new high is silver. I mean, platinum made a high, and I don't know the exact numbers. Most of the stuff is in my head, but not to the dollar, although some of it is. Anyway, platinum was in the $1,000 range. It was a little above that in 1980, and it's made it over 2,000 this time. Palladium made the biggest run so far, and it made it to about $1,100. When similar to silver, since it's an industrial metal, and silver's both a monetary and industrial metal, Ford Motor Company came in and bought a great deal of palladium, and the price shot up to $1,100. And so it made a new high in this market. And of course, gold made a new high once it breached the 850 level, and it's at 1,500 now. It's almost double its high. Now, all those are nominal new highs, meaning those are bigger numbers than they were in 1980. but they're not inflation-adjusted new highs. But silver's high, as probably everyone on this program knows, was 50, and we're very close right now. So if you look at silver vis-a-vis the other three, you could make an argument that, until it gets up into this, nominal new high region, all it's really doing is it's been lagging the other three, and it's playing catch up.
Yeah, David, those are some great points. I personally don't think silver is going to hit any kind of resistance now until we get to that, 50 Hunt Brothers level there. And then I think, we could see some resistance. What do you think about that in terms of like the next resistance point, like the main, paper nominal high level, the $50 mark, the Hunt Brothers mark?
Really tough call. I mean, the last call I made, I think we made about 7 trades. I have, and I've shown them all for my service. That's my mid-tier service. I think we lost a little bit on one of them. Almost every one, if not all of them, have been profitable. The last time we went long was a breakout above 36.71, and that wasn't that long ago. But now we're at 46, so anyone that owns one contract is up $5,000 per dollar, so $50,000 per contract. And we're still long. In other words, that was the last time I said, go long. And of course, there's people that probably subscribe to the service today, and I can't give them that trade, but I'm not putting one on here. You want to protect your profits, move your stop up. Coming to your points, $50 perhaps. I don't know. I didn't give a number this time. I gave a time. I think that by the first week of May, based on the analysis that I do and some of the priority type of stuff that I don't give away, I think that we may see some kind of a blow. I would say a blow off top, because this is far from the ultimate top that I expect, but enough of the momentum to wane that we'll see some type of a breather, some type of correction, some type of profit taking ensue. The problem I have with saying that is what I just mentioned before, and I hate talking on both sides of my mouth, but the big unknown is what the paper shorts are going to do. If they hold fast and just keep adding their short positions on paper and don't panic, or just admit that they're never going to buy it back cheaper, they got to start buying it back here, then all bets are off on what happens from that point, because once that takes place, the price will continue up.
Yeah, and another factor to consider is Ben Bernanke decide to do another round of quantitative easing. Imagine the effect it would have on the precious metal market, because the last time he uttered the word quantitative easing, I believe back in August 2010, the precious metals went straight up.
Absolutely, Mo. I'm sorry if I interrupted you, but you're right. In fact, silver was really starting to roll over, and I was getting ready to put a stop on there, or maybe I did, I can't recall. But and then QE2 was announced, and as you said, and I'm backing you up totally, I mean, it just went crazy, and it's been that way ever since. I think that we're going to see the Bernanke act tough for a while. That's my personal opinion. I've written about it in the Morgan report. I'm a bit of a lone wolf on that. I think he's almost forced to act like the dollar's, worth protecting for a small amount of time. Could be wrong, but the dollar is pretty much in a free fall. It broke a uptrend that it held for almost 3 years. Once it breached that, it's just been going down, down, down. So if he pretends that QE2 is over and pretends that he's going to defend the dollar and give some kind of a deflationary scare into the markets, maybe we'd see the general equity market vis-a-vis the Dow or the S&P 500 sell off noticeably. You might see a dollar rally for a while. So that's kind of what I'm expecting. But who knows? I mean, we are in such a topsy-turvy financial system now that, things, I mean, the volatility in a day in most of these markets was the kind of volatility you wouldn't see in a year's time if when I was your guys' age. I mean, it's just insanity. And I've always predicted that. I told people that the more uncertainty that there is in a market, the more volatility you're going to see, because what it's very clear is that the less I know or the less I expect of the future, the less certain I am, the more this money is going to move around here, there, and everywhere, and it's just acting, schizophrenic in a way. It's just, Chicken Little. Where do I go? Where do I go? Where do I go? Well, obviously, a lot of people have woken up and they say, well, I know where to go. I'm going to go in the gold market, or I know where to go. I know I want to go in the precious metals market. Gold looks too expensive for me. I'm going to go to the silver market.
Yeah, those are some great points, David. And, like rationally, what you said with Ben Bernanke, that might work in a normal situation, but we're not in a normal situation anymore. Like, even a couple months ago, that would have seemed like a great, analysis for me. But now we have the Japan situation, and, Japan was buying a lot of U.S. treasuries, David, and now it looks like Japan's probably going to have to sell some of them to raise money, to bring it back for their cleanup efforts after and rebuild after the succession here of disasters, earthquake, tsunami, nuclear accident in Japan. Like Chris Martenson and Dan Amerman wrote great articles. I don't know if you saw those a couple weeks ago on Financial Sense, talking about how, this might put even more pressure on Ben Bernanke to come out and, tell the markets that, QE2 is being extended, announce QE3 early, something like that. We don't know how that's going to impact things.
Yeah, I did read Chris's, and Chris had written one similar to the scenario I just outlined, and then he kind of backed off of that, and that's fine. I certainly changed my mind often enough. I'm not, beholden to my scenario at all. We'll have to see. All I do know is that you can't print your way out of this mess. You can't print wealth, and you can't rebuild Japan just by throwing a bunch of dollars at it. You got to get, real labor and real raw materials in there. And how it plays out, I don't know exactly. No one does. But it's really, really at the point, I think, where any small, not small, but any disruption in the market by, the bond market or the foreign currency market or a swap deal or a CDS or something that would, as you said, Jason, normal market conditions not have much of a reaction, could now have a greater reaction because the markets are so skittish. In fact, I just did a new video that I put on a website of mine called silver123.net, silver123.net, and it outlines a scenario where the dollar is actually crashes and what takes place during that. And it's based on a movie called Rollover that was done in 1981. And it talks about some of the banks getting scared. And once some of the banks got scared, they all got scared. They all moved on one side of the boat, and how it unraveled was quite an eye-opener. And it's a video. You can watch it. It's based on, as I said, this movie that was written back in 1981.
Now, Dave, quick question about silver. If it goes past 50, people are saying that once it goes past 50, it is now in phase 3 of the bull market. Do you believe that, or do you believe it will still be in phase 2?
I would say phase 2, but I'm smart enough to know no one gets those things right without 20/20 hindsight. I'm not saying I'm not right. I think we're in phase 2, but it's easy to look backwards and see how the chart really went, and then you can say, oh, this is 1, 2, 3. Don't you see that? And it's obvious, but I don't think you're in phase 3 until you are really in a inflation adjusted new high, which puts silver, depending on which inflation database you use, but roughly $135, $140 an ounce. So I'm not looking for silver at 50 to be in a phase 3, not at all.
Yeah, David, that's exactly my opinion too. And some confirming evidence for that is how the gold and silver shares have performed. They're lagging, bullion, especially, in general, like a lot of the gold shares have lagged bullion a lot. And some of the silver shares lately have been lagging a lot. There's talk by John Hathaway and James Turk and John Embry and Eric Sprott, and they've been talking with hedge fund managers, and it seems to me that they've put the spread trade back on, where I guess it's long gold and silver bullion or GLD or SLV, and maybe they're still shorting the mining shares. Is that what you see too? And I definitely think that those types of things would confirm that we're still in phase 2, because I'm running the valuation numbers on some of these silver mining shares, and they're still at tremendous discounts. Producers, lots of good assets. And, in phase 3, wouldn't you expect to be able to buy you would be expecting to see, large premiums on some of these guys?
No, I couldn't have said it better myself. You do great work. I've actually used some of your work in the Morgan Report, and of course, given you credit for it. That's almost precisely how I see it. In fact, I got an email this morning from one of my members and asked a question. It wasn't that involved, why are the show, where to put new money. And I said, in a fair way, the most undervalued is very easily proven to be the mining shares. Now, that doesn't mean they're not going lower from here for a while, but your best value investing at this point would be some, not every one of them, the mining equities.
Yes, that's a great advice to give to anybody is to invest in bullion, physical bullion as well, but invest in mining shares as well because you get one, you get exposure to the precious metals market, and two, you get leverage as well. Um, Now, shifting gears to China now. I believe a couple of weeks ago you went to Hong Kong to attend a conference. What was your reaction once you got there regarding to the atmosphere um, and their attitude toward the precious metal market?
Well, it was my second year to the Mines and Money in Hong Kong, so that was year 2 for me. It was the 4th year of that conference. Last year when I was there was a great deal of interest in the metals and resources in general. And I thought that this is probably going to become the finance center of mining in the not too distant future. In other words, it will probably supersede Toronto and Vancouver as the place you go to get money to finance a junior, but more than the junior mining sector, which is primarily Vancouver, the mid-tier, the ones with the feasibility study already in place, or to upgrade an existing mine or get new capital to expand an existing mine. In other words, I really think this is going to become the financial center for the mining industry over time. Having said that, what your question was, is this show from last year to this year was increased by, I would say, a factor of 4.
Wow.
But people were telling me it wasn't quite a factor of 400%. It was more like 300%. But I was kind of dumbfounded when I walked in this year because it was at a different hotel. Not that that makes a big difference. It was in a different hotel, but I just know what the size was last year. Well, now I know why I was in this different hotel. It was because they needed all that floor space for all the amount of vendors. And then, of course, the main speaking hall. I didn't speak last year, by the way, but I was a speaker this year. And it was much, much larger than it was the year before. So I would say that's that part of it. The second part that you asked was about, what are they thinking on the metals? And I couldn't do a survey of everybody that was at the show. So this is just anecdotal evidence. But I showed a video on the silver market that was produced by a friend of mine as my warm-up. And I got comments from a few people that was the best video they have seen. It's very succinct for about 6 minutes on the silver market, portraying silver as both an industrial metal and as a monetary metal, and how it compares to gold over different time frames, like from 1950, from the last 10 years, from the advent of the GLD and the SLV. So it's a very, very well constructed, very articulate video on the silver market. Then I went in and I spoke on the speech I've been doing globally here, and that's silver over the next decade. And I explained basically that I was very bullish on silver and have been from the beginning. I actually wrote years ago that I thought silver was the best investment opportunity of my lifetime. And I, believe that at the time. Now, whether, $50 silver from that point on is the best investment of someone's lifetime, I can't really say. I mean, it's up tenfold for a commodity right now. So, touche to silver. But the amount of interest in the metals is increasing a great deal. But I want to be fair. It's not just the precious metals. It's, all the resource sector as well. But there is more focus on the precious metals. And I would say this is the first time that part of Asia, Hong Kong, has really kind of got the silver story. I was asked to go to Bloomberg and give the silver story, and I had about 3 minutes. And they really are pretty much gold centric, but they're starting to get it because they're starting to store silver in Hong Kong. They're starting to have different trading vehicles out of Singapore that are silver only. So there is, I'll call it, an awakening toward a silver market there. Gold is pretty much accepted and, used as an investment vehicle in that part of Asia.
Now, David, was that a Daniel Visions video, the 6-minute silver video that you were referring to earlier in your last comments?
It was, yes.
Okay, yeah, that's a great video. We're hoping to get Daniel Vision on here for an interview shortly too. So you would say then that people in Asia in your limited sampling size here at the Hong Kong conference, you would say more investors are just starting then to learn the silver story and do some of their due diligence, or do you think that like they've already been very knowledgeable about it?
Well, I'd say Asia in general is fairly knowledgeable about silver, but Hong Kong specifically probably less knowledgeable. I mean, if you go into the banks and you see what they're buying, it's more than 80% gold. But now they're starting to understand silver, so we're seeing more and more of that. On the greater China story, citizens have been kind of knowing to buy gold and silver forever, but primarily gold again. And as of a couple years ago, more and more of a awakening, you might call it, in the silver market has come about. Now, the problem with China that I see, and this is my opinion, so I'm very clear here, this is opinion, but a lot of the buying of silver in China, mainland China, is over the counter with a bank, and it's paper silver. Now, I'm not saying that a paper certificate in China isn't backed by physical, but I always have my doubts, so I'll remain consistent there. So if you go into the bank and you say, I want to put in so many yuan into the silver market, you're going to get a sheet of paper or a pretty looking certificate that says you have 188 ounces, and you're going to take that home. So there isn't a lot of stress to physically hold the silver in your hand in China, like I emphasize here in the States, but there certainly is a robust activity. But there's one part about the China and the silver story I'd like to kind of divert onto, if you don't mind, because it's really, I think, the story that's never told about China and silver. If you may let me do that.
Yeah, go ahead, Dave.
Okay. The real story, I mean, investment demand is important, but, an ounce of silver never asks where's the demand coming from. It just has demand. It's got demand from an investor. It's got demand from industry. If you go back about 15 years ago, the per capita use of silver in China was 1/70th the amount of use in the Western nations. So if you were in China or living in China, your amount of use of silver was 1/70th the amount. Well, that's not true anymore because China has a great deal of cell phones, laptop computers, skyscrapers with silver film on the windows to reflect the heat and the light, automobiles, communications, electricity, electronic devices, and on it goes. Now, I don't know if it's now at 1/7 of what it is in the West or 1/50th, but I know it's not 1/70th anymore. It's probably more like the 1/7. And so that is a subtle, not really talked about very often, big demand for silver in China. And no one that buys a cell phone, to my knowledge, that's buying a cell phone in China thinks, I'm a silver investor. Because in a way, that's absurd. They're buying a cell phone, but without silver, it wouldn't function properly. And the amount of silver in that cell phone is ridiculously small, but it still exists. And when you've got 1.4 billion people that are becoming westernized and are using all these electronic gadgets that need electricity and communications and laptop computers and everything else that involves silver, you can see where I'm going with this. That unknown demand, you might call it, is a huge demand just by China modernizing. Not talking about the raw investment demand. And remember, on the investment side, and coming back to that, China was the last nation state to go off the silver standard. So you'd probably have to be in my age bracket or so to really know that. But there are a lot of Chinese in their 50s as well. So I think you're just going to see more and more demand. Now, I know there's other parts of the China story that Jason wants to get to, and those are not very robust pictures, but I want Jason to come in and ask those questions. But that's where I see the silver story in China. So you got both sides, the investment side and the industrial side.
Yeah, those are great points, David. I wanted to bring up, how what your opinions are on the whole China story in general, because we're just hearing Jim Chanos, and Jim's picks his battles. He's a well-renowned short. He makes a majority of his money on the short side. Well-known hedge fund manager, and he has never been more convinced about anything really than the property bubble and the collapse in China. And the way I see this is I see two opposing forces here pulling. I see Ben Bernanke and the other central bankers printing lots of money, and I see China and these other commodity investors where the money's going to. I don't see any better fundamental stories than the commodities market. Now, are we going to have a correction? Maybe, but I was wondering your opinion, since now you've been over in Asia. What do you think of the whole Asian situation and the way this plays out with central bankers who are just willing to print money, and what's going on in Asia?
Well, what's going on in the housing market, I agree with Chanos. It is definitely started already. It's rather massive. It's significant, and it's starting down in double-digit levels. So the property bubble, in my view, has certainly burst in the larger cities in China. I think it'll continue. I think it's far from the bottom, and I think it's going to have a very large impact on their overall global GDP, because no one's exempt from one of these bubbles popping, no matter how much they need raw materials to build out. If they've got an oversupply of anything, and it can happen even in China, not that everyone has a house, but it's a price factor. I mean, not everyone can afford $1 million house or a $100,000 house or whatever it is. In other words, they're overbuilt for what the market demand can handle right now, and it's starting to come down rapidly. So I don't think Ben's and other central bankers' ability to print their way out of this will work when you have that kind of a contraction in that largest sector. I mean, most people, when you get down to it, are more similar than a lot of people think. I mean, whether you're Chinese or European or American, you want food, water, and shelter. I mean, you want the basics. And when one of those very important needs, shelter, is overvalued, it has an impact psychologically across the board, whether you could afford a house or not. When the housing market goes, everybody senses it. So I'm really bearish on that right now, Jason. I just am.
I think China would be able to solve a lot of their problems, David, if they allowed the RMB to revalue faster. Because I'm a big believer in free markets here, and the currency games that these guys are playing, like the China's eventually going to need all those houses. They have that many people. I've seen documentaries where the people want to move into the houses, but their money can't afford them right now, and there's a lot of speculation in the market. But if the RMB was revalued 30 or 40% higher, then the people would probably be able to afford those real estate properties to actually live in, rather than to buy as investment property.
Well, let me comment on your comment. You're a very bright man, and you're right. If and I agree, that's a great take the way an Austrian would analyze it. If the RMB was able to revalue, and let's say it happened over this weekend or something, and then again, as you say, now that what you're working for is coming up more to, well, let's call it global standards, where they're getting paid more fairly, in my book. Certainly they could afford more in that way, and certainly that would have a great influence on this, temporary problem. I mean, in other words, if this housing bubble bursts, as I've said it has, and the duration under the currency mark that we're at now was going to go for 5 years, you revalue. I mean, that could make it go for only a year or so, and things are back to normal, and you're flying, to the upside again. So, very valid point. Thanks for bringing that up, into this discussion.
Yeah, and one final comment I wanted to make is, what's different about this bull run of precious metal and commodity market in general is that there is more global demand for the commodities compared to the previous bull market in the 70s and 80s. So it's not just the demand in the U.S. for the gold and silver or for oil. It's scattered throughout the world now. So the fundamentals are a lot different now, and it's not fair to compare this bull market to the previous bull market in our history.
I agree, and that's why the silver story is so compelling, because if you look at where silver was in 1980 and you think about it or study it, what you find is that there's far less silver available for investment or for industry than there was in 1980. And the demand side is global now, not just the United States. So it's a very compelling story, and as it is with other commodities as well.
Yes, I agree. Now let's just transition to a subject not related to the precious metals market, if you don't mind. Let's discuss this recent movie that just came out this past weekend, Atlas Shrugged. Jason and I went to see this movie last weekend, and we enjoyed it very much. And we went to see this movie because we thought it would be an accurate uh, showing of what's going on in this country regarding how government meddles too much with the economy and put too much regulation on corporation. Now, I know that you haven't seen this movie, but you have read the book. What years have you noticed anything in the book that can be related to what's happening now as well?
Oh, absolutely. In fact, when I was in college, it was kind of like the in thing to do to read Atlas Shrugged. And of course, that goes back a few years. But I remember, some of the book. I have a good memory, but not not a photographic memory, at least not yet. But anyway, no, the overall theme is playing out in my life. I mean, going back to Thomas Jefferson, the best government the best government governs least governs best. I don't have the quote quite right, but he who governs least governs best, something along those lines. And, the whole premise of the American system was based upon rugged individualism, and the government basically stayed out of your life, and all rights were God-given, and all those God-given rights were given to the people, and the people said, we're going to give you, the government, back just a little bit of these rights for protection, in other words, to form a militia or an army, whatever, and to keep some basic fundamental ideals amongst us all, and to make sure that those were really observed in a more well-defined way. The Bill of Rights was produced, which of course are the 10 sections, or not sections, but the 10 points of the Bill of Rights. Now, everybody knew that at my age group. But once you were younger than me, then that sort of got left out of the public school system. Anyway, the point being is that the more government gets involved, the more things become less efficient. As an Austrian economist, we all believe that, again, he who governs least governs best. Let the free market determine it. It doesn't make a perfect world. It's the best system available. The American system works very, very well when you let it. I mean, the free markets are great. What a concept. But we haven't had free markets for a very, very, very long time. The freest market of all would be the example of too big to fail. In a free market, there's no such thing as too big to fail. You succeed or you fail. People forget that the right to succeed means the right to fail. That's what the American system used to be, that regardless of your size, if you built a car A and you built a car B, and people bought car B because of whatever reason, style or efficiency or a combination thereof, and very few car A's were sold, car A would go out of business, and the markets would determine the efficiency. All that has gone away. You've got, price subsidies for different automobiles. You've got price subsidies for farmers. You've got certain programs for the sugar market, where the American sugar market is propped up and can't compete with the world sugar market. That's just one of the commodities. I mean, it just goes on and on and on. Of course, there's a big bureaucracy that has to look over the sugar supply and look over, what's going on, and it just creates more and more and more. Well, the more and more government that you create, the less and less and less you get out of the free market. In fact, you strangle the free market to the point where we're at now, where basically, and for all intents and purposes, it's just barely breathing at this point in time. So in a way, it really, really grinds me. And if you go back to my mission statement, it's to teach and empower people to understand the benefits of an honest financial system. I don't have gold and silver in my mission statement. I mean, I'm right there with Ayn Rand. I mean, I want free market capitalism. I want to be able to invest in, Moe's new idea for a more efficient automobile that gets 200 miles to the gallon and cleans the air at the same time. But it's tough in this market because there'd be so many regulations and so many hurdles and so much red tape to get that thing off the ground. It'd be very difficult, but it still can be done. But we just need to take a deep breath to find the problem and accurately, and no politician is willing to do that.
Yeah,
once the problem is defined, then we start looking at real solutions to it.
That's well said, David. Mo and I were just at a biofuels conference for the last 2 days here in DC. It was the Advanced Biofuels Leadership Conference. And, a lot of these CEOs, they just had amazing technologies. Like, we're talking they can turn literally like sugar now in the lab. They can get it to break down quickly, from cellulose, ethanol, or algae. They can get that to break down basically into sugar, and they could get the molecules to look exactly like oil and create other petroleum products, renewable, fresh, and all that. But a lot of these CEOs, instead of necessarily focusing on the technology, on the economics, on beating their competitor, they're focused on, the DOE, the Department of Agriculture, making sure their loan grants are in. And they're wasting way too much time on dealing with the bureaucrats rather than, making sure the project is economic on its own stance. And I was, talking with a lot of these CEOs there. It was great that we got, to meet these CEOs. These guys are pretty entrepreneurial, but, they're not used to just competing on their own. They're talking, with all this, I need to do this with the government better, or I need to do that with the government better. And, me and Mo were telling them that, no, that the free market, when the oil prices are at $150, $200 a barrel and they stay there, you guys are going to get all the money you need, and that's what's going to take care of things. That the free market will vote eventually. And
oh no, yeah, well said. Well, I'm really, hope I can not offend either one of you guys. I'm really proud of you guys. And this is the kind of relationships I want to build more of. Is young, intelligent guys and gals and I've met quite a few gals along this path of mine. Met one in London. I don't want to divert too far, but this is what we need. We need some energy. We need energy, vision, and leadership. And it's got to come from you guys. I mean, I'm not going to last forever, and I'm far from, on my deathbed. But nonetheless, it comes from youth enthusiasm and a mission. You got to have a mission, and you know what? It can be done, and I'm still very, very big on the human spirit and what can be done. But it's not going to come out of the bureaucracy. That's as Reagan said, the government is the problem.
I agree. I definitely agree. It just is too much meddling with the corporation and the banking, and just too much lobbying and special interests. And you quoted Thomas Jefferson, and Benjamin Franklin once said that people who choose security over freedom deserve neither. Which still applies today, because people want the government to protect them. When you got the Second Amendment, you can bear arms. If someone goes after you, you can protect yourself. So there's just too much government meddling, too much bureaucracy, and it's making the government the economy way inefficient, or just too much subsidy. I mean, like, look at the Amtrak. To get a train ticket from DC to New York City costs $250. Now I can take a bus and get there the same amount of time as Amtrak for $50 both ways. And this is what I'm talking about. Just too much subsidies and just too much reliance on government to do everything for you. It's getting way too out of control.
Well, it is, and your generation. I don't know how much of your generation understands this stuff. You have a better feel for that than I do, but that's what we need. We need people to just go back and live the principles that this country was founded on, regardless of how much government interference is going on. In other words, I'm not saying to be anti-government or protest or not. That's not what I'm saying. What I'm saying is to live your life upon the principles of rugged individualism. Be responsible for your own health. Be responsible for your own retirement. And you can do all those things within the current system that exists. It's just basically it's a wake up from like a movie like Atlas Shrugged. You say, you know what, that's what's really going on, but I don't have to participate in that. I don't have to rely on the government for my medical care. I don't have to rely on the government for my pension or my retirement funds. I don't have to rely on them for a lot of stuff. I can rely on my own abilities to, do this stuff. And that, I think, is going to be the big movement because, the system literally is breaking down. We are in a general breakdown crisis right now, whether we understand it or not. Financially, I'll put a date on it. It happened in August of 2007, manifested in the stock market and the financial markets in November of 2008. And we've yet to get out of it. The only way that Bank A is trading with Bank B's paper is because the Fed is getting in between those two and turning it into T-bills, and both are accepting that. But what happens when people stop accepting T-bills? Well, then Mr. Bernanke comes along and says, well, we'll buy them. So that's where we're at. We're basically at the end of the road. We are at the end of the road, at the edge of the cliff, and we haven't got too many more steps to go. And once we go over that cliff, you can't put anything back together.
Yeah, exactly, David. And what I'm worried about the most, is like you said, since my generation is not well versed, in Austrian school economics, it's not taught in the majority of universities. Most people have not found online. Most people don't know who Ayn Rand is. And I was just, out on Saturday night talking with a random stranger, around my age. And she said she can't tell the difference between what capitalism and socialism is. And I don't think that's uncommon. I think that's a very common view among people our age. And I'm worried, that we're going to head towards the totalitarianism, side of the government thing where, government has created a lot of these problems and then they end up, taking more power.
Well, you may be right. I appreciate the input. All I can say is I am an idealist. I'm going to die an idealist. And I'm also going to tell you, 3 words that Winston Churchill went hundreds of miles to say, and he got out to do his speech, and he said, never give up. And, when the revolution started in the United States, it wasn't because, 50% or more decided that they needed to take on the British. It was about 1% of the people that stood up that we all know by names if you studied American history. And I don't know how much you get in that in the public school system now, but I mean, like when Patrick Henry said, he says, as for you gentlemen, I do not know. In other words, I'm not going to speak for you gentlemen, but as for me, give me liberty or give me death. In other words, he knew that there were things worth fighting for. And he was going to tell his friends and associates and brothers to come on board with him. But he knew that he couldn't live under what was going on with the British system. And he's willing to die for something better. Now, I know I'm getting a bit dramatic here, but all I'm saying is it doesn't take very many with the right idea to turn the thing around. So it doesn't take, a lot of Jasons and Moes to get that idea, talk, tell, especially now with the internet. And that's where we finally have an advantage in the free market, to tell it to, your age group and anybody, of course, but particularly the younger people, so that they understand the difference and they understand that, the stuff on the grocery store has a very cumbersome methodology to get it there and all this other stuff. We could talk for hours, but the point is well made by you. I'm also just backing you up and saying, don't give up, keep going. And with the internet, I think we have a darn good chance of turning this thing around. It only takes the right ideas and put forth in a good way or an understandable way for the people to catch on. I think, again, coming back to my favorite topic, silver, I think that's what silver's showing us. I think that people are voting with their, the renminbi and the euro and, the Aussie dollar and the U.S. dollar. I want silver because I might not understand everything that's going on, but I know this is real. I know I can trust it, and I'm voting. Just give me some more silver.
That's a good way to look at it. I like that. Well, that's pretty much the wrap on this podcast interview. David Morgan, thank you for taking your time to speak with us. If people want to learn more about you and what you do, where can they go?
Well, first of all, thanks for one of my best interviews in a very long time, and I do several, but it was great being with both of you. I'm just going to give that website out one more time. I have a few web pages and websites, but this one, silver123.net. It's a good summation of 2 of the videos I've done recently, one on the Matrix, which is actually geared pretty much toward your age group to get them to wake up and see the difference between the red pill and the blue pill. And the other one is the one that I just did, which is basically a scenario of a dollar breakdown crisis and what the outcome would be and how rapidly it could take place. So if you go to silver123.net, you'll be able to see my shining face, as old as it is, and probably get a little bit of education as well.
Yeah, for our newbies here, definitely check out David Morgan's work, check out Jason Hummel's work, and check out Ted Butler and Eric Sprott and some of the other people there. Learn those names. If you're in gold and silver or looking to put some money into there, move out of the dollar, you need to know these guys' names. You need to know their work. You need to follow them. These guys know exactly what they're talking about, and most importantly, they're good and honest people, and their hearts are in the right place.
And yes, and don't forget that also that Jason and I and Chris Marchese also wrote the treasure hunting report for precious metal stocks. It's available online if you go to momoneyblog.com/gold silver report. We are going to update that report and post it online hopefully by the end of this week. So if you want to wait for that edition, you might as well, because we're going to add more companies and provide fresh new content as well. And so yeah, anything else you want to add, Jason?
No, that's it. Other than to thank David for his time, since he's a very busy man right now.
Yes, and thank you, David Morgan, for joining us. And hopefully when next time you come back on board for another interview, we'll have a website up.
Very good. Well, thanks for having me.
No problem.